everybody. Welcome to the July 13th, 2026 IndiView Weekly Market Update. I'm Jeremy Bryan, and this is powered by IndiWealth. Today, we're going to get right into those hot button market issues. So let's get started. So let's start with number one. The Iran conflict is back on again, sort of. Iran is now saying they're closing the Strait of Hormuz, and the U.S. is saying, well, we're not going to let you. Oil prices really haven't jumped aggressively here. They are up, but they're still in that $70 range. And if you've heard me talk before, I still say 60 to 80 is normalized, kind of an oil range over a longer period of time. So it does seem like that companies in general have really figured out, and this goes back to kind of COVID areas, of how to be resilient in the face of geopolitical conflict. I think we've become a lot better at it. Now, can we avoid it completely? Absolutely not. But companies have, and I think COVID was the biggest catalyst for this, is they've really tried to risk manage their overall books of business and saying, how can we still do what we need to do, even if this happens, even if something gets shut down, even if something as important as the oil pipelines and Strait of Hormuz get shut down, even as our supply chains get shut down because of rolling COVID restrictions and these kinds of things, natural disasters, all these instances create really risk management concerns for businesses. But it does seem that global businesses have become better and more resilient and more diversified with regard to their streams of supply chains so that they can continue to do business going forward. So I've been struck a little bit by people's somewhat malaise of this conflict. Again, we're in the $73 range for oil right now. That is not by any stretch of the imagination suggesting that we're incredibly worried about what's going to happen in Iran and the U.S. conflict. But also the businesses have, and we'll hear more about this during earnings, but I'll be interested to hear about how that situation has affected businesses and how they've been able to adjust. But just in general, with regard to business and earnings growth and it being so robust, again, led by a lot of specific companies, but still the general broad consensus growth is still pretty good. So in that shape, I'd be interested to hear if this is having any effect or if that resilience factor continues into Q2, which I suggest it probably did. Turning to number two, we have CPI coming this week. Consensus estimates are for 3.8%, which is actually a dip down from where we were last month. We'll see. I think that's actually probably right, considering last month, we saw a pretty dramatic decline in oil prices, which again affect input costs. Now it's not perfect through the stream, but we're not accelerating that number going forward here. So unless dramatic other goods are going to be a cause of secondary inflation, which are a possibility, I think we could actually see it come down to that 3.8, 3.9-ish range, somewhere around there. Which is, again, it's elevated, so it's not taken care of, but at least it's not getting progressively worse like we saw in 21 and 22 when it was just going up and up and up and up. And, we went from 5 to 6 to 7 to 8. We're now talking about going from 3 to 4 and 4 to 3.8. So hopefully this is kind of a plateaued at an elevated trend, and hopefully we can start bringing it down over a longer period of time. But right now, I think the best estimate to suggest is that it is elevated. It is elevated. It is going to continue to be elevated, but it's not getting dramatically worse. So we'll see when it comes out if that changes course this week. But as of right now, that's our base case scenario. Turning to number three, we have financials earnings coming this week. I suggested that last week. I think there's going to be a lot of discussion and analysis on investment banking. So I wanted to spend a little time on it. Investment banking right now, we have the largest IPO in history. And we're, from a mergers and acquisitions perspective, I think setting on pace to set a record year. So there's going to be a lot of discussion about investment banking and how much of a windfall that was for especially these large money center banks, like your JP Morgans, your Goldman Sachs's, your Morgan Stanley's, Wells Fargo to a certain extent, Bank of America is probably in there too. These banks get revenue and get earnings from investment banking. Now, what I would tell you in following these companies over a longer period of time is that they don't tend to get aggressively rewarded for investment banking. It can kind of sometimes be a double-edged sword in the effect of people don't want to give a multiple of revenue, a higher valuation for these banks based upon that one-time dopamine hit of investment banking revenue. They tend to say, "Oh, that was one time in nature, so we're going to try to normalize that over an extended period," and you don't get a lot of aggressive valuation bump from them. Your earnings bump can absolutely be the case. These can have substantial earnings growth from investment banking, but you don't tend to get a lot of people following on and saying, "Well, this company's more valuable now because the investment banking numbers were incredible." And on the other end of that sword, you tend to, when it has a comparison for the following year, you tend to sometimes get a little penalized. So it's a tough situation for banks. I mean, they will take it. There's no question about it. They wouldn't be in this business if it wasn't for the good times and the money they can make during these good times. So it's absolutely worth it for them to do so. But I don't expect that even if investment banking numbers are incredibly strong, I don't expect the multiples of your Bank of America's, your JP Morgan's, your Goldman Sachs's to dramatically reflect that through higher valuations going forward. I don't see that. Historically, that hasn't been the case. We'll see. I mean, the only way that I could see that actually happening is if they were to come out, and they rarely, if ever, do this, come out and saying, the pipeline is still very robust. We think we could do this for 2-3 years down the road. I think people would be very skeptical about that. But I don't see this as a dramatic boost of that, even though the earnings profile could be substantially increased by this influx of investment banking revenue that we've seen thus far. So one of the things to watch out for, to be honest with you, it won't be the predominant thing that I'm watching out for when I look at financials. I look much more at the health of the overall economy and the health of the consumer through their credit card data, through their loan growth data. Those are the kinds of things I pay a little bit more attention to. And then for your Goldman Sachs and your Morgan Stanleys, I pay attention to the wealth management side because I want to know from that, because it's a much more recurring revenue stream on wealth management than it is on iBanking. iBanking tends to come flush at once, and then you got to find the next deal. Wealth management, as people get more and more wealthy, and as more and more people need help, and as more and more advisors can help them, especially again amongst those large firms, that tends to be much more of a long-lasting and recurring revenue stream. So wealth management and banking, traditional banking, is what I'm going to pay more attention to with the financials earnings coming up this week. Lastly, on the personal side, I finally played the 82-0 game. If you're not familiar with that, 82-0 has been working its way through social media. It's a basketball app where you pick teams based upon a team, Cleveland, New York, whatever it may be, Golden State, and then you pick this is all random, and you get a year or a decade, so it's 70s, 80s, 90s, 2000s, 10s, 20s. Those kinds of things. And so you get those randomly put together, and it gives you, Golden State in the 70s, and you pick a player from that. And your goal is to pick a team that can go 82-0 based upon their algorithm. Their algorithm's not perfect, whatever. You can kind of game the system a little bit. But I will say it's kind of fun. And it became pretty addicting to me. I was playing it quite a bit this weekend, and I got to 81-1. So I have yet to get an 82-0 team. I don't know how frequent it is. I haven't looked it up. Maybe I'm just not very good at building teams, but the best I've been able to do is 81-1. I've gotten a couple 77s in there. But it is fun to kind of build this up, and especially for somebody like me who follows the history of the NBA. I've been around a long time now, getting older, and so I know the NBA a little bit. I went through the 80s and the 90s and all that stuff, and so it's fun for me to kind of revisit some of those eras, and then also revisit some of the earlier eras that I know less about. To see, hey, who were the good players then, and what do their stats look like during that period of time? So for a geek like me, this game is very addicting, and to try to get that perfect team is a fun exercise. So if you're interested, just look up 82-0 and you'll be able to find it pretty quickly. That's all we have this week. Tune in next week for our next hot button topics. But until then, thank you very much. Take care of yourselves.